Damn, Kilo, you want to record it again?
The best there is, the best there was, and the best there ever will be.
What's going down, baby? It's Black Smooth the Barber. Behind every legend, it's a great barber. I'm here, I'm here, I'm here. I said that, meant that, and represent that. Watch me grow. First thing first, go ahead, watch me grow. I'm not just a barber, baby, I do got flow. It is what it is.
Peace, love, and light. Is Tiffany Ray. Again, I'm trying to get back on. Hopefully you guys can hear me this time. Hopefully we don't have any technical difficulties. And just give us 1 second. Our class is going to start at 6:30, and today is going to be about mortgage and student loans. So just give us 1 second. Thank you for tuning in. As soon as you get on, please, please, please make sure you drop us a comment. Hopefully everyone is having a wonderful, wonderful, wonderful Wednesday. I am. Again, thanks for tuning in on this beautiful Wednesday. All right, I see you in here, Shelton. Here we go. Wants to be on your live. Let me include you. Approved. I think we're going to work out really well.
What's happening?
Hey, how are you?
I'm outstanding. I'm outstanding. Can you hear me okay?
Yes, I can hear you really, really good. Really, really good. Thank you so much. I'm just telling everyone that we're just starting off a little early just to make sure everything is going well, because I didn't want to wait till 6:30. So yes. Thank you, thank you, thank you. I'm telling everybody that come in on the chat to make sure they drop some type of comment below so that we know that they are actually in the chat.
True. Very true. Very true.
Awesome. Happy Wednesday to you.
Happy hump day.
Happy hump day. I'm so excited to speak with you. Like, you're one of the type mortgage lenders here in Houston. Let's go.
Hey, I'm excited to be here. I laid out my mortgage lending clothes for this.
Come on, mortgage lending clothes. Let's get fresh.
Yeah,
Let's get fresh and approved.
Yeah, can you dig it? Can you dig it? Clear to close. Those are the best 3 words I can hear. Clear to close.
Clear to close. Clear to close.
Beautiful words. We definitely
Awesome. I'm excited. We're going to get started promptly at 6:30.
Perfect.
Also, too, try to make sure you save the video if you can.
Okay, hopefully I can.
Yes. Facebook has been doing some really crazy things. So hopefully we can save this video. And once I'm going to tell everyone to share this video, I'm going to share it in all types of groups. So everyone would know our information. And then once at 6:30, I'm going to introduce you. I want you to just give us all your information so people can contact you.
Okay, perfect.
Okay, perfect. Cool.
I can definitely do that. I'll put my website in there real quick too, so it can be in the
Yes.
There. Let's go there.
Let's see. Right.
There you go. So yeah, so that website has a lot of good information on it also.
Yes. There you go.
Mm-hmm.
So I have your book. Matter of fact.
Yeah.
Let me go grab your book. It's really, really good. It's really good. It's very informative. I'm definitely going to put in a review for you.
Thank you.
So make sure I'm going to let everybody know about your book. It's really, really good. Just give me 1 second. Let me go run and get it.
Yes.
So your book is in my car.
Oh, that's cool. It's all good.
It's in my car. Yes, but it's really, really good. Very, very informative. So
thank you.
That's good information.
I'm glad you liked it.
Yes. I'm going to go ahead and make sure I'm interactive here as well.
Right.
That's good information. There we go.
I like doing his lives.
Yes, me too.
Yeah.
Well, you know what? This is actually my first live. This is my first live. Yes.
Really? Yeah, I
Yes,
do
yes,
it
yes.
with Maggie Sales. I own up 25 credit repair. I do it with her a
Uh-huh.
lot on Instagram and stuff. And so she passed out a lot of credit education and stuff like that as well. So she's another one about the community, about really putting good information out to the people. So I'm connected
Right.
to some solid people out here that really care about, really growing.
Yeah, that's why I rock with you.
I like that. I can dig it. I
All
can dig
right,
it.
so let's get started. It's 6:30. We're going to be on time. Thank you so much again for joining us. I am Tiffany Ray, Realtor here in Houston, Texas. I have one of the top, one of the best, the most knowledgeable mortgage lenders here in Houston, Mr. Shelton. Go ahead and just give them your information. Let them know who you are.
All right, my Shelton Fortenberry Jr. is my name. Hashtag loan officer who cares. If you just Google that, you'll find a whole page of information on me about that there. I've been in the mortgage industry since 2000. I've been a licensed lender since 2013. I
Oh
really
my
love what I
credentials.
do. I really love helping the people out and really educating the people. And so I'm just all about just really just putting people in the most positive position and change the concept of the lending process to make it really, really easyable and take the, take away the trepidation, if you will, of getting a home.
Absolutely.
So I'm really passionate
Absolutely.
about it.
And that's why we vibe so much, and that's why we can work together so well, because we have some of the same, the mindset and of what we want for our community and things like that. So today we're going to be talking about mortgage and student loans. I know everybody, majority of the people here have student loans. And at one point, people were so afraid to even apply for a mortgage simply because of student loans. Well, I have Mr. Sheldon here on live. He's going to give us the rundown on student loans, if they can help you or if they can hurt you. So he's going to give you the details. Again, if you're looking for a realtor, hey, I'm Tiffany Ray. My information will be
Right.
posted below. This is one of my lenders that I work with. He's very trustworthy. He is very knowledgeable. He's very responsive, and he has amazing programs. He's, fluent with credit. He's fluent with lending. Like, he's all around the top guy. So he's going to give us the rundown on student loans with mortgage. So go ahead. The floor is yours.
All right, cool. The student loans with mortgages. Okay, let's start with FHA. One of the most common loans that people are very familiar with, right? FHA requires a 3.5% down payment. And if you have student loans, what FHA will do is they will do 0.5% of the balance of the student loans. So if I run your credit and you have student loans, per every trade line of those student loans, I have to count 0.5% of that balance towards your debt as a monthly payment, okay, with FHA. Unless you have an itemization with them or a plan with them, or where you make an installment payments with them, to where you say that we make equally, just say for this example, 10 years of evenly payments, then if that's going to pay it off, I can use that. If not, I have to use the 0.5%. Okay, because how they look at it is that with student loans, even if they're in deferment and stuff like that, because a lot of people put them in deferment, they think that that debt is not going away. Deferment doesn't mean disappear. Deferment just means that it's going to come up at some point in time, and how the underwriter looks at it is that we have to count it some kind of way. Okay, FHA just changed the rules. It used to be 1%, and they changed it to 0.5% now. Okay.
Right. That's what I was going to say, that it used to be 1%, which is, and so people may think, oh, just half percent versus 1. That's a big difference.
Yeah.
That's a major, major, major difference. So, don't be asleep when you see from 1 to 0.50. That's a major difference, and you definitely need to take advantage of it. So go ahead.
Big time, exactly. So then now we go to conventional loans, if you will. People say, well, my credit is great. I don't necessarily want an FHA loan. I want a conventional loan. Okay, great. So conventional loans, a lot of people, what they are on sometimes is an income-based repayment plan. Okay, and if you're on an income-based repayment plan with your student loans, even if they have your payments at 0, we can use 0 as their payment. Okay, for the income-based repayment plan with the student loans, if you get the Fannie Mae finance and things of that nature. Now with Freddie Mac, which is the same entity as Fannie Mae, which is a conventional, we can do 0.5%. Okay, they hit 0.5%. Okay, but now if you're not on an income-based repayment plan, okay, or like anything, whatever, Fannie Mae hits you 1%. You see what I mean? So either way it goes, they're going to count those student loans, and just depends on the credit score, and the program will determine whether it's going to be 0.5% or 1%. In most cases, it's a 0.5%, because just say, for example, FHA, as that I mentioned earlier, then you have VA, and then you have USDA. They do a 0.5%, unless you're on that payment plan, that monthly, you know, installment plan, whatever. So it's going to be counted. So the reason why they changed it from that 1% with the half with the FHA gave more people opportunity to afford a home, because a lot of people were getting, you know, out of the market, price out of the market, you know, because they had those student loans. And even if the loan is deferred, if I can say real quick too, your that interest is adding up daily. So even if you start out with 50,000 and you defer, just defer, look at your credit report. That 50,000 now is probably 60,000.
Right. It keeps increasing.
It keeps increasing. So they don't mind doing you a favor of, hey man, yeah, we'll extend it. Yeah, no problem, no problem. And you think, okay, great. But at the end of the day, it's costing you, you know, because it's just going to increase daily. And that's the story that they don't really tell you. So overall, it counts. You know, you're going to have to pay it back some kind of way.
Anyway,
and you can't bankrupt in a way either. You can't even file bankruptcy and get rid of government debt.
That's very interesting. So I think, you know, just to reiterate and piggyback what you said, you know, I want people to understand deferment does not mean stop.
No, ma'am.
You know, it just means pause. However, your interest is continuing to grow. So it's very, very important that we understand that difference. It's not stopping. It's just continuing to grow, and it's just pausing your payments.
Yes. Because
so
your payments are stopping. Your payments are stopping, but like I said, the interest is steady, just piling up on you.
So you're speaking on like a fixed rate. So when you're saying the installments, it has to be a certain amount. Let's give you an example: $500 every month for 10 years.
Yes, and if that 500 over 10 years pays off that loan, then we use that payment.
Gotcha.
Yeah.
Okay.
Yeah.
Okay. So you would say that, because I have a lot of questions with people saying, oh, I have a student loan. So with Shelton is just saying that it does not hinder you from getting a loan. You just have to know the rules.
Yes.
You have to understand also too what type of loan you're getting, because like you said, conventional, FHA, and USDA, they all have different programs, correct?
Yes, ma'am. They have different parameters when it comes to student loans and stuff. The majority of them, they hit a half or whatever, or again, whatever amortized. And most of the time with that, it's the grade of the two, right? So as always, they're going to get the worst case scenario, because when those payments start coming, because it's almost like this, it's almost putting the borrower in a bad situation to where we get you this home, we don't count this student loan debt, right? Now, all of a sudden, 2 years down the line, you got $1,000 a month payment that you have to pay for the student loan. Now you got to make a decision to pay this or pay your mortgage, because we didn't count it. You see what I mean? And so it's for sometimes the borrowers tend to think that we're being hard on them, but it's really for their benefit though, because we have to count it some kind of way.
Right. So there is no way. So what basically let's go back. Let's reverse.
Yes,
there is no way you can't get out of your student loan debt when it comes to applying for a mortgage. It has to be counted.
Some kind of way. Even if now the best way people do it, income-based payment plan, if it shows zero, then we show zero. You know, if you're doing conventional financing, you know, so again, but if FHA financing with that same scenario, 0.5%.
So go back to conventional. You said, so if you're doing conventional.
Yes, ma'am. Conventional financing, which is 3 to 5% down, up to 20% down. Okay, conventional financing, you know, so meaning that you can do, if you're on an income-based repayment plan, which is student loan servicer, and then we get some documents to show you on an income-based repayment plan, and if that shows $0 amount that they require for that, because that's how you guys negotiated, we use zero as that monthly payment. Or if you own one, and then you can. Yes, ma'am. For conventional.
Go ahead. I'm sorry.
No. Then also, if you're paying, like say if you have one student loan, like a big large amount, but you have an income-based repayment plan for them, we use that as your monthly payment. You see what I mean? So long as we can document what it's showing, you know, we can use that. We don't have to worry about guessing or just plugging in a half. You know.
Right. And that's for conventional, but you said FHA is 0.5, 0.50.
Yes, ma'am. 0.5%. Yes, ma'am.
Okay.
0.5% of the balance.
Gotcha. Okay, and that's the outstanding balance.
Yes, ma'am. With outstanding balance. Yes, ma'am.
So let's say I'm a potential client, I'm coming to you, I'm like, hey, I want to get a house and I have student loans. So what are the steps? What do I need to bring in order for you to view my student loans?
Okay. What I would get you to do is do an application. Okay. I would run your
Mm-hmm.
credit and look and see what's on your credit. And then the credit would show, okay, these student loans. We would have a conversation. Okay. Hey, what's going on with these student loans? If I show 0 for the monthly payment on the credit report, okay, well,
Mm-hmm.
they're in deferment or whatever. They told me I don't have to pay due to COVID, or they say I don't have to make payments right now, because of whatever. I'm like, okay, cool. So depending on your credit score would dictate how I need to count those student loans. If you have a high credit score that says 680 and above, now we can say, okay, well, my credit score is 680. Well, we should shoot for conventional financing. What I would like for you to do is contact your student loan servicer, see if you can get on the income-driven or income-based repayment plan. Let's see what they send you. Then if they send you some documentation, then now, boom, we good. I don't have to worry about hitting you the half or whatever. But if you have if you have a lower credit score, we look and I still have to hit that 0.5% because we have to go FHA.
Right, and that's 680 or below.
Yes, ma'am, 680 or below. And the reason why I say that, because here's again, you can get in a home loan with a 580 credit score, a 620 credit score, even a 500 credit score, but the down payment is going to be higher. That's the reason why I say 680 and above for conventional, because you pay mortgage insurance on these loans, and the higher the credit score, the lower the mortgage insurance factor that you pay. The lower the credit score, the higher mortgage insurance factor. So when all these programs, they're putting these people in these loans with this low credit score, I guarantee when you look at the note that you're paying maybe 400 in principal and maybe 1,000 in interest because of the mortgage insurance and the premiums and the things you're paying for. So really, do you have a house, or do the house kind of have you? Because we maybe could have waited, a month or two to get 20-point increase in our score for that mortgage insurance to go down. So it's really a numbers game. You got to make sure people really looking at your bottom line, because we get paid commission for these loans, the realtor, the lender, and everybody involved, right? So sometimes they're just looking out for their commission and not necessarily for their customer.
Correct. And the way you and I operate is not about that. It's not about that at all. No. We look out for our clients' best interests. We want to make sure that what we're getting them, it's going to be the best at the best. Even if that means we have to wait 30 days, even if that means we have to wait 60 days. We want to make sure that our clients are in the best situation to receive the best.
Yes. Yes. Perfect. That's perfectly said. Because sometimes you can be in a hurry and you can lose patience. And you can want to do something right away, and so you put yourself in a bad position because you really don't want to wait. And there's such a huge difference on the scale between hits and adjustments between a 620 and a 640, a 640 and a 660, a 660 and a 680. So there's so much different. I've been in this thing since 2000. So I'm a nerd when it comes to numbers and secondary marketing and all that. So I work all areas of the lending process, so I know what a good file looks like. So when they sell your loan to the open market, to the secondary market, they want these good files. And as a reward for these good files, you get great credit, you get great rebates, things of that nature, because you position yourself to have a great credit score and you waited. You waited for the right time.
Correct. And timing is everything.
Yes, ma'am.
Timing is everything. And it's very important, as a realtor and you as a lender, as a mortgage lender, when we explain to you all, hey, we need to wait 30 days, or hey, this is what we think you should do. We give you great advice. We hope that you take that advice, because like you said, you're great at numbers. You've been in this game for a long, long time. So you're very well fetched when it comes to what a great file is. So this is why it's very, very important that people are taking notes on this particular live, because you're giving the game that a lot of people will need when it comes to having student loans and getting a mortgage. So basically, to answer the question, yes, you can get a home. Yes, you can get a mortgage with your student loans.
Yes, you can. Yes, you can. It's just a matter of what positioning yourself. Just a matter of positioning yourself.
Awesome. Any more information you can give us in regards to, the student loans?
Yeah, what I would say is that don't let the the amount of student loans that you have intimidate you. And if you can make some payments toward them or whatever, then go on and try to make some payments on them. also, depending on the type of student loans, you may be available for some student loan forgiveness or some things of that nature,
Yes.
depending on the kind of job that you have. Because if you're a teacher working in a particular area, you can give loans forgiveness after 10 years, I believe, in certain situations. So it all depends on what type of student loan you have. Some of that may be forgivable. And also contact your servicer, see about a refinance, see about a consolidation, see about getting a lower rate than what you're being charged. Because again, sometimes we tend to forget because they're in deferment that they're just gone. You know, and they end up hurting us in the end. And so we just kind of pay attention to that aspect of it. Don't let out of sight be out of mind. Yeah, I guess what I'm saying with the student loan, things of that nature. Because when you apply for a home loan, you see the home, talk to the realtor, love the home, talk to me, and I done killed all your dreams because I'm saying you got student loans and this is what I got to count. Now your debt to income ratio is 60%, even though you make great income, because I have to count these student loans some kind of way. And now I'm the bad guy because I have to deliver the bad news to you.
Right. Well, before working with me, before we even go look at the house, we go through you first. Like before we get anybody hopes up high and go look at these houses and like, hey, no, we go through you first and we get a pre-approval letter or a pre-qual letter to let us know, hey, this is good to go and this is your budget.
That saves everybody time, though. I mean, I'm sorry, go ahead.
Okay, and I just wanted to kind of reiterate like what you said about, out of sight, out of mind. We tend to be afraid to call our, student loan servicers because we're like, oh, I don't want to deal with it. But there's so many different options out here that can help us. But if we don't know unless we call them to check and see. Don't be letting this interest eat up your credit. This interest continue to pile. Like you said, it takes one phone call.
That's it. I mean, just talk to them. All they can say is no.
Right.
Just have the conversation because it's your business. Even when looking at credit, even running credit profiles, I try to make sure that they know as much as possible because these are your numbers. These are your numbers. Because if you don't know your numbers, how many credit repair people out here right now? There's a bunch of them. But a lot of people don't do credit education. You see what I'm saying? So when they come to me and they thinking, I paid this person X amount of dollars, but they did nothing. Did you know what they did? Did you watch what they did? Do you know anything about the process? They just kind of like hoping something happens. So I would say get involved in it. You see what I mean, though? You have to be involved because these are your numbers. If they're going down and they're not great numbers, it's okay. You're involved in that, right? So let's get involved in getting those numbers improved. So that way you don't have to see me again or you again with, well, I'm still looking. A year later, I'm still looking because I trusted somebody else to look at my numbers. Right.
And in the process with using yourself and myself together, this is why I pride myself with using Sheldon. Simply because he's very informative. He's very knowledgeable. And it's very important that you have someone like that on your team because you don't want to get to the table and you don't even know what's going on. You have no idea what the numbers are. You have no idea what your debt to income ratio means. You have no idea what that even means. You have no idea what your student loans, when they're due, so it's very, very important that, like you said, to be very active within this process. And like you said, you teach credit education.
Yes.
So it's very, very, very helpful, guys, that you guys are taking these notes, writing down his information. Again, this is a lender that I use. So if you're looking for a home, looking to purchase, speak with me as your realtor. And this guy, this wonderful king here, will be able to assist you in the lending process.
Thank you so much for the kind words. I always appreciate it. I love what I do. I really do. I light up at the opportunity that I can help people and guide them through this process, because a home really, it's a liability until it's an asset, right? And so you want to go in with the best game plan possible because I don't want to get all your money out your savings account to get you to this home. But also I want you to be able to afford the home. And now you're not working 80, 90 hours a week to pay for a home that you're never at.
Right.
Because so you want to enjoy the process because referrals are business, right? So I want you to speak glowingly of how the great relationship you had with Shelton, with Tiffany throughout this mortgage process and how happy you are. Look how the situation they put you in. That's going to bring more clients. That's going to bring more business. That's going to bring more. That's how you do it rather than have the predatory lending and things of that nature. You know,
Right.
put you in
Right.
good, because there's a lot of predatory lending that's happening right now. Honestly, some forms of down payment assistance, in my opinion, are predatory lending because they put them at a higher rate, and a lot of times that customer
Mm-hmm.
never refinances into a lower rate.
At all. Exactly. And that's which, since you're speaking on that, I don't want you to go in too far depth,
Yeah.
depth, simply because we're going to have another call, another live in an upcoming few weeks about that, so people can understand the process of the down payment and the different programs and the assistance and what they really mean. So, you know, he's, again, stay tuned, guys. Make sure you're writing our, you know, the dates down. We will come back really soon over the next few weeks, and we will touch bases. We'll come up with a date and we'll let you guys know on when we will talk about, you know, the down payment programs and what is required. And actually we'll have another session about credit, you know, and realty. So
Yes.
just stay tuned to us. You know, this is free information. We're trying to help everyone. We're trying to pour the word into you guys. So hopefully you all share this live, take good notes. Hopefully this helped you all as well. We appreciate all the feedback that you all have.
That's it. And that's the thing, though, just putting people in a position to really succeed. You know, put you in a position to
Correct.
really win and really say, if you say you want a home, we want it for you just as bad as you want it. Okay.
Yes.
So know that
Yes.
you with somebody that's going to be just as happy for you to congratulate you through the process. So when you look good, we look good. Okay. And so we are
Absolutely.
walking in our purpose, right? So we're walking in our purpose and we're passionate. So that's why you get the level of commitment, the level of energy, the level of give a dang on about you as an individual, because we do as people, we just happen to be lenders and realtors, but we still care about
Yes.
people, right? You know,
Absolutely.
so
That's
that's
number
my thing.
one.
We all got children. Yeah, we got children. We all got people. So we need to care about people. And that's the biggest thing, because our reputation. So when they talk about, you know, the great realtor you are, the great lender that I am, they speaking glowingly. They're not just really just hyping it up. It's not really social media hype. It's real. Like, you know what though is, hey, these people are about
Right.
that business. They're about what they say they're about. Because so many times you run into people, especially in the social media field, that are not who they are off camera. You know, who they claim to be, whatever, you know, a lot of times. So I really appreciate the fact you be solid in who you are, and you didn't change, you never switched up. You was exactly who you were from the
Correct.
very first
Correct.
conversation to now. And that's rare though, because oftentimes it happens more often than not to where people tend to not be there.
Right. Right. Thank you so much. Yeah, we definitely pride in helping our clients and with provide them with the best information. So we thank you all so much for tuning in to this live about mortgage and student loans. The answer to your question: yes, you can get you can get a mortgage loan with student loans. Yes, yes, yes. There are different programs for different loans, as Shelton already discussed. And again, his information will be listed below. We will pick up again. So you guys stay tuned. Make sure you're sharing this. I'm Tiffany Ray, realtor here in Houston, Texas. If you're looking to buy, sell, lease, I'm your girl. I'm very knowledgeable. I'm very professional, very nice, very cool and calm. And I'm looking to help people and put people, in their best interest. Their best interest is
Yeah,
my best interest. And this is something that
yeah,
I love to do. So Shelton is
yeah.
the same exact way. That's why we vibe so perfectly together. And thank you guys so much for tuning in. Any last questions before we get off this call? Just drop your,
Questions. Don't be scared that you don't know. We
hopefully we've answered as
go through
many
training.
questions.
But that's it. I'm saying don't be scared to ask questions. You know, we got you. We want to help you. We want to put you in a good position. We want you to succeed. And again, just thank you guys for just really tuning in. I appreciate your time.
Thank you so much. So let's just wait a few seconds. Let's see if anybody tuned in regards to questions. I believe
Okay.
you, honestly, we kind of answered every single thing. So I did
Okay.
have one question. Someone did
Yeah.
say the student loans negatively impact home mortgage, but all in all, you already answered the question.
Yeah. It just affects your debt to income ratio. So depending
Yes,
on how much of the student loans we have to count and what formula we have to use, will determine how much we have to add to your monthly debt.
perfect, perfect, perfect. All right, so that concludes our questions on my behalf.
Okay. All right. Cool.
All right.
I'm
So
good.
thank you guys so much for tuning in. We appreciate you guys. Again, Shelton's information is listed below. He also has a book, guys. He has a book that's on Amazon. I actually have the book as well. Very, very informative. It just teaches you the process of purchasing a home. Do you want to just talk about that really fast?
Yeah, the book is called Let's Get Your Home Loan Ready. It's sold on Amazon in paperback form and also in a Kindle form. It's called Let's Get Your Home Loan Ready on Amazon. What I do is that once this live is over with it, I'll put the link to it. I'll put it in the comment section so anybody can check it out there. But it's called Let's Get Your Home Loan Ready. A short book, easy read, and no matter. And
Yes.
I do only lending in the state of Texas, but no matter where you are, that book will really help you and prepare you to get into a home.
Awesome. 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 Thank you so much. I appreciate your time, Shelton. Again, we'll touch bases and we will put up the dates for the next few classes or the next few lives because I feel like this is a wonderful, wonderful idea.
Oh, perfect. Thank you so much. I appreciate your time and your energy, and you keep doing a great thing and keep changing the world out here.
Thank you so much. Peace, love, and light to everyone on this call. Please make sure you share this broadcast. This is information, helpful information for everyone with student loans and want to get home loan ready. So we appreciate your time again. If you still have any questions or concerns and you see this after this live, please just shoot us over a DM, shoot me over a DM, and I'll be happy to assist you. Thank you guys again.
Peace.
Bye. Peace.
Wave.